News out of Russia roiled the markets earlier this week. Let's jump into how this is impacting your money and what you should do. So this is not necessarily a message intended to be about the news, as I want to be as sensitive as possible to what's going on overseas right now. And honestly, also because by the time I've recorded this, new developments will have already occurred. Instead, this message is intended to serve as a reminder of the resiliency of the markets, and specifically as it pertains to national security. So the market is currently sitting around where we were late spring of last year, and most corrections, which is defined as a drop of 10% or more from the highs, they aren't just about price. They typically also have an element of time. In the last correction we experienced during COVID, it only took 23 days to go from the peak down to the trough, where the market found a bottom. By comparison, in 2010 and 2011, it took 5 months for that to happen. 2015 and 2016, it took 8 months. So I think we all need to adjust our expectations of that quick V-shaped recovery here, more in tune with the long-term norms of a typical correction. Not only in price, that 10% price drop, but also in terms of time. So the question is, do we go lower from here? Quite possibly. We could definitely have another leg lower, as it typically takes longer for the market to digest uncertainty and find a bottom. Definitely longer than we've been used to here as of late. For many of our clients, though, last year, we peeled off an allocation of the portfolio specifically for energy, which is up about 20% now year to date, and commodities, which is up about 13% year to date. This is why diversification wins over the long run, because now we have the luxury of being able to go sell those areas at a profit and then go buy into the areas that are now trading at a nice discount. This is why it's imperative to have that buy and sell discipline in place. That's exactly what we've been doing this year and what we're going to continue to do this year, in addition to reaping any of the ongoing tax benefits from tax loss harvesting as things are bouncing around. So as you can see on this chart, we plot out the stock market performance following the last couple military-related market events. Notice that if you would have bought into the market during each event, you would have been rewarded eventually. Now, some quicker than others. Obviously, the Afghanistan war, we didn't get as quick of a bounce. That's the only chart here on this graphic where we didn't get that immediate bounce back to previous levels. And that was definitely due to other factors at play, like the tech bubble at that time. Let me also say that I'm not a geopolitics guy, and I don't think anyone can predict with any amount of certainty what Putin's going to do next year. But what I am is a believer in the long-term upward trajectory of the markets. A wise man once told me, never bet on the end of the world, as it only happens once, and those are pretty long odds. With the point being here that anytime national security concerns come up, we can expect large swings. And right now, the immediate future in front of us remains uncertain largely. So yes, we got a great bounce from yesterday, from earlier this week, but it's also reasonable to assume that there's still going to be some large swings ahead here due to that uncertainty. So for how long this continues, what's already priced in the market, it's really tough to say. But ask yourself this: are you going to stop going to McDonald's, buying Nikes, taking a Delta flight to stay in an Airbnb in Florida? Right? Those expectations of corporate earnings, that's what guides the markets. And aside from these short-term, price fluctuations, they are the only thing that the stock market cares about over the long run: future corporate earnings, where it takes a story about tomorrow, how many Big Macs do we think we're going to sell next year, and they assign a price to it today. So if you aren't already retired, then this is an opportunity to invest cash that you may have on the sidelines, kind of in line with the Warren Buffett adage, be greedy when others are fearful, fearful when others are greedy. And if you are retired or close to it, or otherwise just panicking right now, use this as an opportunity to kind of gut check your own personal tolerance for risk. So in closing, I just want to say that with all the wild swings that happened yesterday and really throughout this week, I have not received a single email or a single phone call with concerns from any of my clients. And I believe that it's a testament to our clients' confidence and how we have things positioned, in maybe even more so their trust in the long game. That said, this video is intended to be a reminder of the resiliency of the markets, a reminder that we're keeping an eye on things, and a reminder that I'm here to chat if you want. So as always, stay the course and stay on point. I hope everybody has a great weekend. Take care.